We're live, so thanks for joining. It's version 1 of AMC, which is kind of like my first pass, thorough enough to talk about, not maybe thorough enough to make a trade on, but first impressions. Any questions, just let me know. But I sort of feel like after doing a good amount of homework, not a huge amount, but a good amount, that the stock is fairly valued. But I know some people, basically everybody hates my theory. The bears hate it because they want me to say that it's going to 0. It's going to go to 100, which I also don't think is going to happen. And it turns out that markets are pretty efficient. So I think that I'm right and they're all wrong. But, you know, best of luck to everybody, right? So any questions, just let me know. Somebody did ask me, yeah, go ahead, Shorting.
Complete your thought. Mine was a non sequitur.
Okay. Yeah, so somebody asked me on Reddit, how would you even accomplish 500 hours of research into a single stock? I said that you should do 100 to 500 hours of research when you make an investment. And I'm answering. It's a great question. You could interview management, former and current, vendor partnership interviews and surveys. Of course, let's see, modeling. What else? Phil Fisher, one of my favorite books about the stock market, had a long interview. List, actually. Long due diligence list in his book, Common Stock and Uncommon Profits, or Common Stocks and Uncommon Profits, one of the few books I recommend about the stock market. So you can read Fisher's book. His book's very old. Fisher passed away. It's from the 50s, I think, or 60s. And Warren Buffett also recommends it, and it's got a really good list of due diligence. Even with 100 to 5 hours of due diligence, it's still very easy to get something wrong, so it's not easy at all. But anyway, that's just a quick thought on that. Case studies of analogous investment opportunities, or maybe situations. What else? What else can you do with 100 to 500 hours?
Analysis of competitors.
Yeah, certainly competitors. I tend to sort of think competition is overdone. Somebody's asking how do you find the interviews? You have to do them yourself. You have to talk to management yourself. You have to talk to vendors, partners, employees, current, former, etc. yourself. Go on LinkedIn, call them up, smile and dial. That's what we call it. Visit AMC locations. Great idea. Site visit. What else? Vigo, go ahead. Anybody's welcome to jump in.
Hey, what's going on, Martin?
Hey.
Welcome back.
Thanks.
I have a non-AMC related question. Is that okay?
Yeah, just make it quick.
Hey, real quick. Yeah, so, I like to analyze flow, look at unusual options activity and stuff like that. I happen to come across a ticker, ELAN, Elanco Health.
Sure.
I'm not sure if you ever heard of them before. It's, so they're an animal health, pharmaceutical,
Yep.
They're in the animal space. Saw some unusual flow Friday. Just want to kind of, ping you on any of your thoughts, or, what you thought about Elanco. My only thesis, I thought, as a catalyst is maybe like a monkeypox vaccine or something, because I know monkeypox can be transmitted animal to human, but not vice versa. Maybe people start vaccinating their freaking dogs and, cows and prairie dogs or something like that. But yeah, just any thoughts that you may have on Elanco or any of those animal health companies. Thanks.
Yeah, I mean, they're fantastic businesses. Zoetis is the category leader. It's amazing how they went from just a small piece of Pfizer to now a publicly traded $82 billion market cap, which is kind of crazy because that would have been like half of Pfizer at one point, and they really weren't well understood at all. Elanco is sort of similar, much smaller, of course, at $10 billion, but was Eli Lilly's animal health business that spun out. So it wouldn't be surprising if they were up to something, whether it was being acquired or acquiring somebody else. It could just be somebody putting a trade on, could be meaningless. But it's an interesting space. It's more and more people are spending on animal health, and pharmaceuticals is one of the beneficiaries of that, but so are veterinary labs and things like that. So it's an interesting space. I keep an eye on it. It's a cheaper way to do drug discovery too, You don't have to do as much clinical trials to get an animal drug approved. But anyway, let's talk about AMC, if that's all right. Stoic, did you want to talk about AMC?
Oh, I'm sorry, bro. I didn't have an AMC question.
Oh, okay. Well, what's your other question?
I have a question just about, you have obviously algo around your name. I'm just curious about your thoughts on the strength of decentralization in proof and stake systems where I suppose the more money you have, the more influence you have. Like, how do you think, why would you, not that you suggest it, but why do you think potentially that proof of stake is better than proof of work as a consensus mechanism?
Oh, geez, good question. I don't know that it matters as much, that much. I think that there's bigger issues, like how do you keep your network participation up and network, usage up, and that's kind of the bigger folly. I think the actual plumbing and consensus mechanism, as well as even things like security, generally will become homogenized. I think throughput and actual node usage or node creation, I guess, network effect is the most important thing. Otherwise the currency or token or whatever you want to call it backing the system will atrophy. And I think we're going to start seeing that, quite frankly, if we haven't started seeing it already. I mean, something's happening, obviously. People really need to use the currency for it to be valuable, and I think that for practical things, and I think that we're sort of realizing that a lot of money is backing not a lot of use case in the case of a lot of these tokens, and that's includes Bitcoin and Ethereum. And I think that the tail can't wag the dog. Like, you can't have lots of speculation on these tokens and without a lot of mainstream use, and I think we basically don't get much mainstream use at all. In fact, most of the mainstream use is just speculating and kind of get rich quick speculation. So we really need to transition from a Wild West to a place where you're actually using it more than you're worried about the speculation. You want utilization to be 90% of the use and speculation to be 5 or 10%. I think that unfortunately we have I wouldn't even say the other way around. I think it's 99% speculation and 1% use. So it's unfortunate. And with limited throughput, you're going to have network migration. Like, why would you use Bitcoin or Ethereum with the amount of throughput that exists? Of course, you can duct tape on something with higher throughput, but that's kind of it's pretty easy. Bitcoin and Ethereum aren't that established that it's not just easier to move on to something that's originally just been designed better. So to me, I think there's good news and bad news in blockchain. The good news is it's an important technology that's going to stick around for a long time and change the world. The bad news, I'm not sure it's going to be Bitcoin or Ethereum. Heck, I'm not even sure it's going to be Algorand. It's a weird space where there's not much friction, right? I mean, there's friction for the guy that owns a lot of Bitcoin. He doesn't want to move. But there's no friction for the guy or gal that just wants a blockchain that works and has a lot of throughput. In fact, that person has like almost negative friction. They want to leave the current crappy, systems that exist. So I don't know. Hopefully that makes a little sense. But anyway, anybody else want to talk about?
So through your analysis, did you arrive at kind of a price, a fair value price target that you think, as long as everything with the core business stays the same, that if the price goes, far below that level, that you'll look to accumulate, something like that?
Yeah, let me open the model up real quick. So there's sort of two ways to look at doing a DCF or DCF-like analysis. So the way I like to start is doing what I call like an implicit DCF. So basically, I'd like to solve for the current market stock price, which is usually a reasonable assumption. Like I've said a couple times, I think that 90, maybe even 95% of stocks are fairly valued by the market. That's adjusting for beta factors. So just pure alpha factor. I think most of alpha is squeezed out by, what you have right now in front of us. Market participants keeping their ear to the ground, trying to ferret out information. The market weighing mechanism is amazing. There's a lot of case studies. I did one of my own just for fun one day. I stood up and did a 360, modeled off my unique physique, and I asked the crowd to submit a weight estimate. There are hundreds of people, and their range of weight estimated from 50 pounds off on the low side and more than 50 pounds off on the high side. And I had a scale right there, and they weighed within 1 pound. The average weight of guesses was within 1 pound of my actual weight. And if you need more evidence of the wisdom of crowds, not the madness, but the wisdom of crowds, I think the stock market is a really good example. It's easy to forget about the wisdom of crowds because people think, okay, well, Tesla went up 20x, so how smart can the crowd be? Well, the crowd is still really wise. It's just that the crowd, when you look at a price, the crowd only has a one-dimensional, think of it as an x-axis, I guess, a one-dimensional tool to sort of estimate a future price. And that one-dimensional tool is current price net of risk. So Tesla was quite cheap in hindsight. We all wish we bought Tesla before the split at a low price. If you don't, then, I don't know what's wrong with you. But I certainly wish that I bought Tesla before I realized that they would make billions of dollars of cash flow and have a ton of revenue growth that I didn't expect, and they would produce really efficiently when everybody thought they wouldn't. So now the problem is, of course, 2 years ago, nobody could tell you that with accuracy, right? No, there was a lot of risk. Tesla looked, in fact, really risky. Their CEO seemed to be a bit unhinged. Their production didn't seem to be going great. Their sales didn't seem to be growing great. So the risk-adjusted price, which is kind of a funny way to look at it, but that's sort of the mean consensus or the mean current market price, was fair because people sort of understood that all these things could go off the rails and the company could go bankrupt. As the company proved itself, it went up. So it's a little tautological, but I think that it's important to understand that the crowd gets the price right all the time, in essence, by definition, and that it's important to always respect the market price. Now, you may think that the market's pricing in the risk incorrectly, and that when you looked at the risk of Tesla 2 years ago, you said, oh, pish posh, there's nothing wrong with what's going on here. It's perfectly normal for a CEO to make a fake hostile bid for a company. It's perfectly normal for that same CEO to be smoking weed and doing all these crazy things, and that revenue will shortly be skyrocketing. And you would have been paid for that risk, right? But you're taking a risk unit for a reward unit. It's just that the market is pricing that risk unit differently from the way you price it. And I think AMC is much the same. So I do this implicit DCF to try to get a sense for what is the market pricing. And so when I plugged in my numbers up till 2030, I have AMC returning to probably on an inflation-adjusted basis. Let me sort of do that as we speak. So on an inflation, the peak revenue they had was $5.5 billion, and that was in 2018. I'm sorry, actually the peak revenue they had was $5.5 billion in 2019, but it was very, very close to the 2018 revenue. The peak EBITDA they had was $850, which is more than the 2019 EBITDA of $690. So anyway, if I inflation adjust, let's see here, let me give it 6 years at 4% inflation, which is a little higher than probably reality. Yeah, so I basically have them getting back to maybe a shade under, in fact, their peak revenue adjusted for inflation. So obviously the $5.5 billion revenue in 2019, whenever COVID kind of normalizes, maybe that'll be 2024, hopefully tomorrow, but whenever, the movie business sort of normalizes, you basically getting back to the same revenue is obviously less utilization because prices will have risen. In fact, in this year, 6-7% inflation, so quite substantially in this year, but probably around 2% the years prior. So anyway, I have them sort of just getting back to, maybe even you could argue, a little bit under their peak revenue, and I have them getting back to roughly the peak operating margin. So with that assumption and a 7% discount rate, which I think a few people probably rightfully criticized as a little generous, I don't agree that it's generous, but we'll get to that in a second. But again, you could pump it up to 8%. You get a roughly $11 a share price target. So, I think that, again, I look at the stock market and say that, again, I shouldn't be seeing bargains every second. If you look at 20 stocks and you think 11 of them are cheap, or 15 of them are cheap, or even 4 of them are cheap, you and I are not looking at the same stock market. Most stocks are not cheap. Most stocks are not so expensive that you short them either. I think for every 10 stocks I look at, and I think 100 to 500 hours is a good starting point. And that may sound like a lot, but again, you can divide that over a team. You can divide that over time. many years sometimes to study an industry. That's the homework you have to put in before you really understand something. For something like AMC, I might invest 300 hours into it, but then for the next 2 or 3 companies similar to it, I only have to invest 100 hours. But I don't think you can get away with, say, 5 hours of homework on a company and start trading it. I think that's sort of a great way to lose money. So anyway, this implicit DCF, I basically try to solve for something that's, I don't curve fit for the current stock price, but I probably try to sort of nudge it a little bit closer, like a Ouija board. You know, Buffett always likes to say that he wants to ignore the current stock price completely. I think in practice that we can't necessarily do that, although when you do an M&A deal, like a private equity deal for a family-owned business that hasn't traded in a million years, you don't have a current market price, so you have to sort of guess it. So based on the operating performance and the financial statements. So for me, I picked a 7% discount rate, no terminal growth rate, at around a $700 million terminal cash flow, which is less than their peak, or terminal net income, I should say. And use a pretty high tax rate as well. But it is a U.S. company. That's something that is important to keep in mind. When you have an MNC, you can kind of get away with a 10-15% tax rate. When you're a completely U.S.-based company, which AMC isn't 100% U.S.-based, but when you're a U.S.-based company that's doing U.S. deals and there's no argument where you can offshore IP and stuff like that, you basically are at the mercy of the U.S. corporate tax rate, which is quite high, 35% or 38% at the moment. So, in the long run, I do think they'll have to pay that kind of tax, which is somewhat unfortunate. So anyway, I get, like I said, around $11, which is around the current stock price. I basically say that they'll go back to their old, operating cash flow. So I think that the bears are missing this idea that, the movie business is going away and that it'll never be the same again and things like that. And if you actually look at box office, was not really dropping in 2019. In fact, it grew in 2018. So between 2017 or 2016 and it's sort of been in this low growth pattern for the last 10 years. So, and that's not exactly while Netflix was non-existent. I mean, Netflix was around in 2012, 2015, 2018, 2019. Netflix was doing great, in fact. And if anything, we got confirmation that the movie business isn't going away through things like Scarlett Johansson's spat with Disney. And also, the music business is a good analog where people sort of assumed that nobody would ever buy CDs again, and therefore streaming would crush prices. And there was a big music bear industry for a long time, and a few bold investors stepped up and bought out Warner Music. And those companies now trade for insane high multiples, and people said musical is actually kind of having this nirvana where it's actually a brand new industry that's now a growth industry, which is really funny because for a while there it was left for dead. So I think that the bulls don't have it right in the sense that I don't think that this company and its CEO in particular are going to pull a rabbit out of the hat and actually create new businesses out of nowhere. Most new businesses are boondoggles, right? So every business on the planet wants to create new business lines and grow their business, right? And if you ever took some MBA classes or whatever, you probably studied Coca-Cola. And every time Coca-Cola tries to come out with a new product, it's and there are several others like Ford and others, it's sort of a flop. And inevitably, sometimes you do get new business lines. Look at the AirPods, for example. But by far and large, it's really hard to just say, let's take our capital and invent some new business. It's really difficult. The more adjacent it is to your current business, kind of the more probability you have to succeed. But it often is really hard. And a lot of times, I mean, I've seen this a lot in pharma. If you assume that every new business venture that the company is undertaking is going to be successful, you'll get pretty wild models where every stock is really, really undervalued. Now, this is your bet as an investor, right? You have to bet on management. If management's right and their new efforts are not boondoggles, but they're, boons, then great. You will do really, really well. If AMC can sell popcorn in homes and in supermarkets and things like that, great. That could be more EBITDA. I don't see it, and I'm certainly not going to value it as if it already is successful, right? They're starting from a standing start. So if you've ever started a business, even started a new business line within a big business, which was certainly I've tried to do, it's not easy. You still are sort of a startup within a big business, and you still have a serious chance of failure. Just because your other business is doing well doesn't mean your new business that's basically a startup is going to do well. So I think a lot of the bulls kind of miss that like, starting a new business model too, which is what AMC seems to be doing by being like a merchant bank or kind of investing in other companies. I think that's kind of a big waste of time and probably going to be a negative return, probably a waste of money. You have companies like Biogen that tried to get out of multiple sclerosis by doing a very close adjacency in neurology, and they failed. If you're making MS drugs, you're talking to neurologists, so why not make Alzheimer's drugs? Why not make Parkinson's drugs? Well, Biogen has tried that for 25 years, and it hasn't worked. And they've had different CEOs. They've poured billions and billions of dollars into it. It's frustrating. It's not easy. So, again...
Right, and that's a way more logical step than a movie theater company buying a old gold mining corporation.
Yeah, the gold mine is an embarrassment, and it makes management look bad. It basically says that... It sends a signal to investors that, in fact, when you do model something called return on invested capital, or there's a couple of ways to sort of model, I like to use ROIC, is basically just what is management going to do with the cash balance. And it becomes this really nice way to make this assumption. So I don't have any ROIC for the business because management is signaling to me that they don't know what to do with their capital. That, in essence, that if there's any excess capital returned, that I'm not sure I trust them to spend it in a way that's going to generate any returns for shareholders. Management gets paid a lot, which I didn't like. It's just a brief examination, but board of directors members here make $300,000 plus, which is a lot of money for a board of directors seat. That's an awful lot of money for checking a box and kind of showing up once a month. The CEO makes a fortune in cash. I'm talking about straight cash here, not just RSUs and PSUs and things like that. I'm not sure I really like how management is selling. So all the signals that management's going to do this really great new business endeavors thing doesn't look good. I do think that basically an idiot can run a movie theater, and probably an idiot does. And I think that if you look at the actual business, it's actually really impressive. It doesn't take a genius to do this business, and their film margin is actually pretty good. If you look at the actual film admissions revenue, sort of ticket stub revenue minus film revenue, it's about a 50% gross margin. So basically, for every dollar that you charge in tickets, 50 cents goes to Disney. I mean, that's pretty good business because you also have food on the side, right? So you make money on the food and you make money elsewhere. But
actually, the first 2 weeks of a release, usually it's like 90% to studios.
Well, I'm just looking at the 10Q, so maybe you have better information than that. But the admissions revenue, say in 2019, was $3.3 billion, and the film costs was $1.7 billion. So that leaves around $1.6 billion, which is roughly 50% gross margin, as I defined it. The food and beverage business is way, way better, which is hilarious because you'd have $1.7 billion of food and beverage revenue and only $300 million. So you'd have $1.4 billion of food gross margin, which is crazy, right? I mean, that's where sort of most of the profit is generated. But you still have not a bad business. You have a 50% film gross margin business is kind of like an 80% food gross margin business. Now, the problem is, of course, you have to operate a theater, which is gigantic. It's very expensive to operate a movie theater. So you add in a whole bunch of other margin here. But you have plenty of margin left over, kind of 15-20% operating margins. So it's a fairly healthy business. And I think that anybody who thinks like this business is going away, they're not going to get back, they'll get back to making $500 million to $1 billion of EBITDA. I don't think that's going to be a problem. And then I think they'll be able to pay their loans, which is the important thing. They survived a very close brush with death. So I don't think they'll have, and this is getting back to the bear thesis, to play fair for both sides, I don't think they're going to go bankrupt sort of servicing their debt. So what looks like a really interesting trade here is a cap structure arbitrage. So basically that means you buy the debt and short the stock. And in fact, if I think it's interesting, having looked at this for about a week, again, about 15 hours, maybe 2 hours a day, then I think the rest of Wall Street probably thinks it's pretty interesting. Now, let's take that and think about it some more and say, all right, well, if me, who's been out of practice for 5 years, says, hold on, you buy the debt, you get 20 or 30% in your pocket, you short the stock, and no matter what happens, basically you make money. If the debt goes to par, you make 20% yield plus the debt going up. And your stock will go up too, of course, so you have to hedge it right. But convertible hedgers do this for a living. So what's more likely? There's a nefarious short scheme to take this company down, or it's just the market doing what the market does, which is that, oh, look, here's a free 20 or 30%. That sounds really good. I want to buy the debt, short the stock, and I'm going to make free money. Well, that's why the short interest is so high. It's not because there's a bunch of people trying to short into bankruptcy. It's because there's a bunch of smart investors who say, this looks like a really good arbitrage. I can make free money. In fact, if I were a stockholder of AMC, I might consider buying the debt instead of buying the stock. The stock is riskier than the debt, of course. That's just how that works. But some of this debt trades like a stock. In fact, you get limited upside, right? So if the bonds trade back to 100%, or you get redeemed, or you get paid out in full, you can't get more than 100%. But do you want more than 100%? I mean, I'd rather have the bond doubling, or the bond going up, say, 50%. Although it looks like you can buy some bonds for 60, 70 cents, which usually means a company's going to restructure or go through bankruptcy. Of course, if it's 10 or 20 cents, then it's almost a certainty. But at 60 cents, it's a serious risk. So anyway, to me, that seems like a better play. Buy the debt, and if you want a little hedge, maybe you short 10 or 20% of the stock as a little hedge in case you do see a credit event, or a euphemism for a bankruptcy. So if you're short the stock and the company goes bankrupt, you make a lot of money on the short, but you're going to lose some money on the debt. Now, that all depends on the workout, right? And the problem with owning debt in a Delaware bankruptcy is the workout can take quite a long time, and you got to sit there with this illiquid piece of debt. Now, the debt's still trading. You can sell your debt, but for the average investor out there, you don't want to do this. In fact, the average hedge fund usually doesn't want to do this. But if you're special made to trade distressed debt, you're sort of sign up for it, if you will. So anyway, those are some quick thoughts. I'm sorry if I didn't answer your question, but basically what I'm trying to say is I don't think the business has to do anything but just get back to where it was before COVID, which I don't think is going to be that big of a risk, to be frank.
Did you use any other... Oh, sorry. Go ahead.
Quick question. Is Enrique Martin Shkreli?
Yes.
Wow, this is so cool. You're like my hero. Sorry.
Cool.
I just thought I'd recognize your voice. I'll let him talk.
Yeah, it's me. Just trying to stay away from Twitter police.
Enrique,
I was gonna ask if
great question for you from a few people, for myself and online. I guess I know myself. I missed the online, go live last night. It's back, the Wu-Tang album. But very curious, like, what is your favorite song on the Wu-Tang album that you had confiscated by the government to cover the court's forfeiture judgment against you? Like, I know you got the MP3s, so you're already ahead of it, but we'd love to understand, like, what is your favorite? Like, tell us. We would love to know.
I really don't know. I honestly haven't listened to it that carefully or closely. I didn't buy it because I was the world's biggest Wu-Tang fan. I bought it because it represented a different way to think about the monetization of art.
Wow.
And it's kind of like quadratic voting, right? Like you can, you can't right now, if you're Taylor Swift's biggest fan, you can't actually show your fandom in any other way. You certainly can't show it monetarily. I mean, you can buy every Taylor Swift record, but you can't get a premium product from Taylor Swift for a price larger than the prices that are out there. And it's kind of an interesting limitation where you have other products that scale, say like shoes or handbags or watches, where you know there are watches that cost $1 million and there are watches that cost $10. I'm actually going to be selling the watch that I wore in prison. I'm going to throw that on OpenSea. I'm going to see if anybody wants to buy it. It's going to be a pretty funny endeavor because it's this ratty little G-Shock watch that probably costs about $10. But it'll be fun to see if I throw it on OpenSea if anybody's willing to pay more than $10 for it. But anyway, the point.
Is the watch clear?
It's pretty shitty. I mean, you'll see when the photo comes out. I mean, it's really rag.
Is it clear though? Like
no,
like all the prison tech.
No. It's black. But it's got
Will you cover shipping for the watch?
Hopefully the price will make that irrelevant. But yes, I will cover shipping.
Yes or no?
I will cover shipping. Yes, I promise.
Okay.
I will cover shipping.
Good guy. Thank you.
But it's got my jail number and FCI Fort Dix engraved in the back, which is certainly makes it authentic. And then I was gonna throw away my gel toothbrush, but somebody said I should make that as part of a collector's set, so you can collect.
Dude, you've got a whole collection here.
Oh, I've got my prison ID card, which is got the worst photo of me in the history of mankind.
Wow.
I'd buy that. I would totally buy that.
So yeah, I get the whole jail collection. But in any event, I kind of want to just see what it's like to make and mint an NFT myself and see how it goes.
Are you also selling your prison shank?
I didn't. I had to leave the shank behind, as well as the cell phone. So those just get passed around from prisoner to prisoner. I also did. I tried not to keep shanks. I had guys for that. So one time, there were 2 times that were funny. So
Enrique, I hate to cut you off before your story,
Yeah.
but one more question for you. I'm curious. You know, you're such an idol in like the pharma bro space and you know, the Reddit bro.
Yeah.
You know, you're the guy, right? So one question is like, when can we expect an NFT collection? Is question 1. Question 2 is like, if not NFT, is there going to be like some kind of like shit coin coming from you? Because like obviously fully legal, you don't want to go back in jail. I get
yeah,
it.
that's for sure.
But what's next? Tell us.
Yeah, I have a lot of stuff going on. I thought about doing NFTs. I might still do one. I really don't want to do an NFT that looks like a cash grab. Like if I do one, it's really going to be undersold. Like I'm not going to be out here like being like buy. You know, like that's not me. Like I don't like to pump and promote and be that dude. So like I am thinking about doing one that's going to be more fun and like tongue in cheek. And I really hope people don't buy it and moon it, because like that would be, you know, not my intent at all. But anyway, you'll see it. It's really unique. No one's done this one quite yet. So I hope to come out with something at some point soon. But I'm really busy. There are 2 shitcoins that happened, and I was really against them because I was like, what are you guys doing? You don't have my consent to do this. And I reached out to the people doing it, and they're like, oh, we're going to do it anyway. And I was like, no, don't. I'm going to shit on it if you do. They're like, we don't care if you shit on it. We're making a shitcoin. And so I went to them and I was like, listen, I'm going to buy out your shitcoin, and I'm going to make something useful with it, because I don't like this idea of like there being all these shitcoins lying around that do absolutely nothing. Like it's so stupid to me, like that anybody would do that. So I ended up buying out 2 of these shitcoins, and then basically I'm going to be releasing some software that actually performs a function. I know, crazy idea.
No, look, Enrique, Bitcoin, shitcoin, whatever, you know, all the same, right? I guess the big question I have, and you're in touch with NFT space, not just a cash grab, actually new fun utility. Tell us more, like if you can, if it's not too early. Understand, like what you're planning on launching.
We're still working on it. I think our white page is up to like 40 pages, so you'll see.
Whoa, okay.
Yeah, you'll see white paper. Excuse me. You'll see something real from a real reputable media sort of source and a conference call and all that at some point soon. But you know, it's a sad day for me to see people like take things like Milady's or take things like Goblin Town or whatever, and like these are actually assets that are worth like 20 million, 50 million, like, and they're not worth that, you know. And then to shitcoins even worse. Like I don't know, there was like Squid Coin at one point, the Squid Game coin. Like, all that stuff is so sad to me. It's like such a... I don't know, it's kind of like what somebody maybe must feel when they see a bunch of food thrown away and it's wasted. And it's like, oh man, that could have fed a whole bunch of people. I don't know, I feel that way when I see good food thrown away, you know? So when I see good money thrown away, I'm like, oh man, look at all these people. I feel terrible. Like, so I'm the kind of person that would like go get the food and like try to give it away or something like that. Take it from the garbage, dumpster diving almost, just because I feel that bad about like all that waste. And then I'm also the kind of person that if somebody made a shitcoin about me and all these people started buying it, I was like, oh man, these people are going to get fucked, because, you know, what's going to happen if it's just a meme? Like, I'm in the news today, but I won't be in the news tomorrow. So let me take this and actually run with it. And that's sort of the plan. But let's talk about AMC, if that's okay.
Yeah, no, perfect. I guess last question, then I'll let you go. I know you got like a lot of things to talk about. I guess, you know, everyone wants to talk about you, right? You're front and center. Any other
except for me
things that you want to do, like with your current fame, post jail?
I don't have a lot to add, man. That's that. So Kaki, let's move on.
No, cool. Sounds good.
Hey,
Thank you.
Thanks, man. So
Firstly, just want to say thanks for the analysis on AMC. Like, you clearly know a bunch. So I have a few questions actually. So if I heard correctly, right, like you said fair value is around $11 or so.
Yeah.
So I mean, we can say like AMC is pretty much trading right now at fair value.
Yeah.
So my question is because like this is like a huge following stock, right? Like almost like a cult stock. So
Right.
why don't you think that is like factored in? Like if we just trade it on fundamentals, like Tesla should maybe be like $100, right? So
I disagree. I think Tesla is actually kind of cheap. So
So why do you think that doesn't trade at fundamentals, but AMC does?
Well, I think that you like I said, I mean, if you model out 20 stocks, you should get 10, 15, more like 18 that are fairly valued, and one or two that are cheaper, and one or two that are expensive. And you can buy the cheap ones and short the expensive ones. And that's worked for me, and that's called long-short equity investing. Lots of hedge funds did it, probably most famously the Tiger hedge funds. The Tiger Cubs have had an unparalleled track record of success. Funds like Lone Pine, Tiger Global itself, and even though it's having a very rough year, Viking, which I think had one down year in its entire existence, which is now almost 30 years, Maverick, so forth. I worked for a Tiger Cub. I use that style of deep research, buy one side, short the other side. For me, AMC represents a fair value. Most stocks represent a fair value. Of course, I could be wrong. I've looked at a lot of stocks where I said, oh, this is fairly valued, and it went up 10x. It's not a perfect science. And if investing was a perfect science, we wouldn't have to invest. But that's sort of the tea leaves as I'm reading them.
Yeah, no, because, I mean, I understand what you're saying, but it just seems a little bit strange. A stock that is that popular, trades at fair value. I mean, because not all stocks just trade at fundamentals, right? And so I guess the other question
I think that's a philosophical disagreement. I actually do think the market is an information arbitrage machine, and investors take in information and they basically process that information and reflect that information in the stock price. That's what most people call efficient markets hypothesis, right? There's nothing new about what I'm saying, and it applies whether a stock has had a mania, a stock has had lots of observers and traders, or no observers and traders. Like, to me, it's all like the same shit, basically.
So is there anything, in your opinion, like anyone can do to make that stock go up, or is it simply just part of
Great question.
Wall Street controls?
Yeah, I don't think so. Because remember, Wall Street is every single investor, right? When you buy a share of AMC, you're part of Wall Street. When a hedge fund manager shorts 1 million shares of AMC, he's part of Wall Street. And when a mutual fund, index fund, buys 5 million shares of AMC, that's Wall Street too. And the reason that stocks will stay at the right prices is because on the precipice of every trade, there's a seller and a buyer, whether that's a long seller, somebody who owns the stock and they're just sick of it perhaps, or a short seller who's brand new in the position and thinks it's going to go to 1, so they start shorting. Either seller keeps the price honest. And the same thing applies to the buyer. Whether that's a short seller who's been in the stock a long time and he's frustrated, or maybe he's made money and he wants to get out, and he buys the stock, or a new long buyer who says, I'm interested in this AMC, I just looked at it, let me buy $5,000 worth. All the long buyers and the long... Sorry, can you still hear me?
Yeah.
My phone rang. All the long buyers and all the long sellers keep the market honest. And I don't think there's anything that one set of players can do to stymie the others from doing so, because remember, we have a last sale principle here. Every single stock in the stock market, it doesn't matter if 1 million shares trade or 1 share trades. I think the rule is 100 shares as the minimum. But whatever the last trade is, that's the trade that stands for the current price. And that means that even if 95% of people take their AMC, convert it to a certificate, put it in their drawers, and say, I'm gonna light this on fire. Like, this shit, right? The last 5% of the traders will still set the price, irrespective of those last 95%. So if it's just 5% trading, 95% is locked up because of diamond hands, or because of, for example, a CEO that that owns 95% of the stock, which happens sometimes in business, where 95% of the stock is held by a family. And I encourage you to go look at 90%, 50%, 80% owned stocks by major families. In Europe, there's a lot of these, less so in the U.S., but in Europe you have this kind of aristocratic...
It's one in the U.S. that's mainly owned by one family.
There's a ton, right? Look at Berkshire Hathaway. So there's tons of companies like that, and they still have price discovery. When there's good news, their prices go up. When there's bad news, their prices go down. It really doesn't make a difference. I think market participants try, at least maybe some of them try to think of themselves as more important than they actually are. Like, at the end of the day, the market, if there's one thing that's like kind of indestructible in the world, it's the market system. Like, it's really hard to like fuck with the market system. It just works in the long run. It always has, and I kind of think it always will.
You're cutting in and out a little bit.
I was just gonna say.
So, do you think like the run up to 70 then was just a ton of people buying at once, like an anomaly kind of thing? Since you said it doesn't matter if it had like a mania type of thing. Do you think that was like an anomaly?
Yeah, I think whether it's a gamma squeeze or not, in the long run, these prices shake themselves out. For example, there was a weed stock called Tilray, which had a very large ownership by private equity, and I was short Tilray, and the stock went from 10 or 20 to 200, and it was a really, really painful trade for me, and I lost a good amount of money. This is while I was in prison. I was trading from my Interactive Brokers account while I was in prison, and it was really frustrating. And it is what it is. The life of a long short equity person, you're not always right. You're going to have longs that fuck you up. You're going to have shorts that fuck you up. And hopefully you have more successes than fuck ups. But that was one good fuck up for me where I was right in the long run. Tilray isn't worth anything. The whole sort of recreational cannabis business is kind of not really good business. But I shorted at 100. I shorted at 150. And at 200 I said, this is painful. And I got out. And of course, the stock's at like 10 or 20 bucks today. So the point is that so-called squeezes happen, momentum happens, all that short-term things happen depending on the gyration of market participants. But in the long run, the fair value is what happens. And I think that, yes, in the short run, if you press buy on 5 million shares of any stock in the stock market, it's going to go up. You're going to overwhelm the amount of sellers that there are temporarily. Over time, those sellers will come back and your price will return. And I've done this for 20 years where I've actually played these games in the stock market. I've run experiments. I've said, all right, let me overwhelm the stock market with some buys right now in a certain stock. And this could be a big, large company like AbbVie, where I would go to Morgan Stanley and say, listen, I want to buy 1 million shares of AbbVie right now. And, the market maker would make me a market, or I'd just do it the next day just with level 2. I'd press buy and see what happens. So and some small stocks, I once bought 5% of Rick's Cabaret in a week, and then I sold it all in about 30 minutes. And as you can imagine, in 30 minutes, the stock dropped like 10%. But as I bought it slowly, it sort of affected the price probably a little bit less. So, to me, all this stuff is kind of a charade and a sideshow, and I think, you can blame whatever you want when the stock you buy doesn't go up. And I think that the reality is the market's just doing its thing, and you can't really fuck with it. You can try to fuck with it en masse, but again, the market has ways to sort of balance it out. For example, I was listening to the annual meeting the other day, the recording. It wasn't recorded too well, but I could tell very, very clearly, because I've been in his shoes before, that the CEO wanted to do a secondary pretty bad. That he kept sort of saying, well, you guys don't want us to do it, but, the tea leaves and the vibe that I got was like he'd love to sell a secondary, and who wouldn't? Because he has all this debt to refinance. He's refinancing the debt at somewhat of a high rate. Equity has no interest, right? So just sell 10 million shares. That's $100 million. Sell 20 million shares. Sell 50 million shares. 50 million shares is not going to change the company. In fact, there's a lot of academic papers that show the debt equity sort of equivalence, or debt equity parity, that whether you raise equity or whether you raise debt in the long run actually makes no difference, because your cost of capital is the same. I never realized that. As a CEO of a publicly traded company, I really, really hated issuing equity because I felt it was dilutive to me as the largest shareholder. I didn't like that. and I wanted to skimp and get by on whatever I could get by on, and I would sometimes, if I could, I'd borrow money, and I'd borrow money at 10 or 12%. And the paper I read was like, showed me how dumb it was. That at the end of the day, like, basically your cost of capital is your cost of capital. So,
but it does change the stage for the quote unquote MOAS, right? Because if you issue shares and there's more shares in the float, it frees up more for shorting, right? So what I guess the belief is that if
but it
you
also
issue shares,
yeah,
it will stop the quote unquote MOAS.
There'll be plenty of places for the shares to go because, for example, the short sellers probably would cover in a big offering. That's typically what shorts do. In fact, they made Reg M just to stop that, because what we used to do in biotech, and I think everyone who's been around in biotech knows it's kind of like a open secret, is that when you look at a biotech company running out of money, you'd short the crap out of it, right? And then you'd, when the company invariably called around and was like, hey, you know, we're down to like a couple quarters of cash, we're looking to do a secondary. You know, when you get the call for the secondary, you cover your short in the secondary. And if you get warrants on top, it's even better. So if, let's say the company was trading at 12, you would short it, and by far and large, they'll price a deal at 10, use the pressure or the deal kind of price, the discount to the last sale, you go ahead and cover at 10, and then you're on your way. So I think that's probably what, in fact, if I was short if I was short AMC right now, let's say I shorted 10 million shares at 15. I would literally be going to the company begging them, listen, you guys need capital, let me buy 10 million shares at 12, you know, let me give you 120 million, and I would pocket. Yeah, exactly. I would pocket 30 million bucks, and the company would have more capital, and everybody would be happy. Now, the funny thing is, the more capital the company gets, the more the bonds would trade up because they wouldn't default, right? They'd have money to pay the debt. So right now, they're kind of playing a weird game where it's like, all right, you know what? We'll run our balance sheet to the bone. People, the bond market will wonder if we're even solvent, but at least we're not issuing equity. And it's kind of like, I'm not sure this is going to do you any favors, you know?
Well, that would be him valuing the retail investors more than the capital.
Yeah, and it'll all come out in the wash. I mean, you can try to skimp. For example, I have them paying down their debt, and this is a little bit of a joke, over the next 6 years. Just an EBITDA sweep. Basically, the EBITDA sweeps to the debt, and they would be unlevered and finally cash positive in 2028, right? Which is like, okay, fine, never issue a share again. It's a little bit silly.
He refinanced the debt already up to 2029.
Well, you can keep pushing it, right?
Yeah.
You know, the debt market's as active as equity markets, so they'll keep refining him, and basically he'll probably spend. I mean, it'll probably be parity again, to my point, but like it'll basically be parity with doing an offering. There's no free lunch for him. There's no free lunch for the apes. There's no free lunch for anybody, and that's why at the end of the day, you will simply get what you pay for, right? You're buying a claim of a business, and that business is gonna probably make $600-900 million a year someday. You know, you also have to contend with this debt at the moment. When it all shakes out and you put it in a calculator, your HP 12C or your Microsoft Excel, you're going to get the same number I get. Now, if you have a special edge and you think the movie business can generate $10 billion for AMC, and you're right, you're going to make money. It's going to go long. If you think that movies are going away and they only can get to like $3 billion in revenue, okay, then I'm wrong, and it's going to go down and maybe even go bankrupt. But I think the reality is going to be somewhere in between. Neely, did you want to jump in?
I do. I want to ask you a question on your process, Martin, if I can, for just a minute. So AMC, just looking at the 14A, the definitive proxy.
Yeah.
And how much do you weigh into like looking at compensation changes? You know, more and more disclosure is given on that. And if you just look at it on AMC right now, you can see that like their long-term comp just decreased from last year to this year, which means their short-term comp increased, and then their variable comp decreased. And I feel like those are kind of two conflicting trends, but I'm just curious how much you weigh in with the 14A on your process. Thanks.
Yeah, I look at it pretty closely, but the one thing I'd add is I just look at the cash comp, because the stock-based comp is very hard to actually parse, because if you use Black-Scholes and stuff like that, it's really not clear what the value of those options are. So the cash comp is unambiguous, right? Cash is cash. And these guys get paid a lot. Look, that's partially it's corporate America. But at the same token, like, if you're rich, you're a co-owner of the Philly 76ers, you're the CEO of Royal Caribbean, you got hundreds of millions of dollars, it doesn't really make much sense that you need $1.5 million. But, that's just me. That's just my style. Like, I never paid myself. My last drug company, I took a salary of $0. And the one before that, I took a salary of like $200,000 or $300,000. And our market cap wasn't that far away from AMC's. So, it's just a weird number for me. But it is.
Do you add in their bonuses?
Yeah, so it's about $6 million for.
Do you consider their bonuses as cash? Okay.
The cash bonus, the total cash comp for AA, last I checked, was $6 million, which for saving the company from bankruptcy, quote unquote, saving the company from bankruptcy, depending how you look at it. I don't know. That seems like a lot for a company that's knee deep in debt. Now, I'm come from the school where every dollar matters, but for them, I think they're looking at it and saying, "Well, we have $5 billion in debt. What's $6 million of wasteful spending? Who really gives a shit? We have to pay our CEO something." I just don't like that kind of spending. When you add in the board comp, that's another $1 million or so, $1.5 million. Even the audit comp, I thought was too expensive.
I thought it was high too.
Yeah,
that was a high number. Yeah,
it's a lot of money going to a whole lot of nothing.
Yeah, that was a high number too. I agree with your assessment there. Just one more related, and I'm going to step back down. And that is, I totally agree with you on the CEO comp. I think that's one analysis. But I also think it's kind of interesting when you look at the non-CEO pay, right?
Oh,
Disclosures. Yeah. Because, if you view organizations are people are patterns are,
sure.
It matters more to the people, right, than it does to the CEO, to your point, right? So I guess that's where, do you get into that sort of deep of the weeds, or are you just kind of looking at the CEO pay?
It gets really bad with me. I mean, I'm kind of a nitpicker and a crazy person, so I'll actually make a list of. One time I was trading one stock. I made a list of every employee, and I tried to get salaries for every single person. And if you're plugged into the industry that you're in, like, you can actually get that kind of information through headhunters and other friends of friends and things like that. Like. So if you know good headhunters, you know who's looking for jobs, you know what the rumors are about pay at those jobs, you get all the scuttlebutt and water cooler talk. Scuttlebutt is an old term from Phil Fisher in that book I mentioned, Common Stocks and Uncommon Profits. It's an old term that just means grapevine, really. Grapevine's an old term too, right? But ultimately, like, you can find out whatever you need to find out. It depends on how you approach it. I mean, I certainly don't like sneaking around, but some of it requires a little bit of being coy about your interests. Obviously, asking the guy behind the stand, who's serving you the candy and popcorn is probably not going to get you very far. But in terms of people in the corporate office and things like that, you can probably get a decent sense for what's going on. So I do care a lot about that stuff. Obviously, the NEOs, named executive officers, are the only people that you're going to get strictly exact comp information for, but you can certainly hear about what the company's kind of, at least directionally, what kind of stuff they're paying. Sometimes you can see job postings, and they have sort of areas of comp. I really like to look at it because I like to see, like, one company that I was critical of and I got their CEO fired, they had a really crazy kind of like legal and HR function where for a small sort of pharmaceutical company, I think they had a legal department of 10 people and HR of like 6. And I was just like, wait, this is nuts. Like, this is way too much spending. And it was indicative of broader spending problems at the company that I was criticizing as a shareholder. And I ended up being right, I think. Again, there are some companies that treat their businesses as their... It's weird, but it's like an egotistical thing, if you know what I'm talking about, to be the CEO of a company and have 200 or 300 people salute you every day as like the boss. And you're like, yeah, why not another 100 people? You just kind of don't care. And you're adding employees who are like, oh, so-and-so's cousin, or, again, you sort of feel like the head honcho, and it's sort of a ridiculous thing when in reality you're supposed to be really frugal with the company's resources. And you can just tell when a company's doing that and when a company's not doing that. And I think that it doesn't mean you don't pay your people. You have to pay people. You want to pay for good talent. But you also have to sort of think about, well, is this person the best talent? And I actually think Adam Aron's resume is pretty good. How in touch is he with this industry, and how, like, wedded is he to best practices and good operations? I don't know. I think the 95, maybe even 99 out of 100 Fortune 500 CEOs would never do the gold deal that he did, the Hycroft deal. I think that's just batshit crazy. And I do think where there's smoke, there's fire. I'm giving them a pass on this, even though I really shouldn't. And I'm just saying, okay, this is a one and done. He's going to basically eat the whole... This is
Go
ahead.
When you were in prison, how did you trade? Did you, was there an offset information? Did you even trade? When did you hear about the GameStop AMC rising?
So I don't want to talk about this stuff too much, but I leave it, maybe the best thing to say is just I had 80 or 90% of what I had when I was home. So that's maybe the best way to put it. I had a staff, I had resources, I had all kinds of tools in my tool belt. So I'm not saying it was like being home, but I had pretty good resources.
On what you were saying before about the giving him a pass on H1C, so on the last earnings call, I'm sure you heard it, he said that he was holding back $100 million to make another investment into I'm guessing, distressed company.
Yeah, and that's...
Feel that.
I think it's crazy. I think that, to become an investment company... I mean, to be a really good investment company, I think it's actually dovetails with what I was saying earlier, where 100 to 500 hours of research, right, to make an investment. In private equity, per person, you actually do more. Not per person, but grouped as a team. Private equity teams will do 1,000 hours of plus of research to make a private equity investment. And he's doing more or less private equity style investing, and I don't think he's quite doing the research or has the sort of not intelligence, but let's say domain expertise to make an investment in a different field like that. I don't know. I think that's really suspect. Like I said, I'm going to give it a pass. $100 million at a time cannot screw a company that's worth $5 or $6 billion up, but it certainly doesn't bode well. And eventually, that person gets fired if those investments don't work, right? And I bet these investments won't work. And that's the self-corrective mechanism, that there will be a reckoning, right? In 2 years, if Hycroft's worth nothing and whatever second investment he makes is worth nothing, the board just says, "Hey, pal, it's time to retire," right? And he's the
chairman of the board.
Yeah, but he's 67. I think he'll be retiring at some point soon either way. And I bet you if those investments don't go well, the new board says, yeah, we're not doing those strategic deals anymore. We're going to focus on our core business, and that'll probably be the best move either way. But listen, maybe the deals work out really well. I'm just valuing them at a write-off, which means if they go up, there's more upside to the shares. But they're and there very well might be. I don't know. Stonky, do you want to jump in?
Yeah, thanks. So just curious about the far out of the money puts that have either been bought or sold to hedge for on heavy strike January or July 15th, and it goes way up. And I know that they say apes are buying all the calls, so they're probably selling the 145s just to sell a ton of them that are expire worthless. But there's a considerable hedge, it seems like, on the put side. What do you have to say about that?
So I think part of it might have to do with the with the capital structure arbitrage that I articulated earlier. If you wanted to, instead of shorting the stock on this arbitrage, you could buy the debt and buy those puts, depending on the price. And that way you don't, shorting the stock can be a little weird if you don't want to pay the borrow costs and you think the borrow costs may jump. So now, of course, there's no arbitrage there either. I once thought about, okay, well, if I don't want to pay borrow costs on some of the hard-to-borrow shorts I was doing, let me just buy puts. But of course, the smart people that make markets and puts and things like that figure that out and price that in as well. So there's no easy way to do that. Now, I don't know exactly why there's all these puts traded. I'm actually not paying attention to that. It's not my cup of tea, to be frank. I really try to...
I'm actually got it open, and there's only about 100,000 OI on the Jan 23 and Jan 24 for the puts.
Well, 100,000 is not a small amount. That's a lot for an option.
It's only about.
Are you saying 1,000 or 100,000? Because they're if you add the 2 zeros or not add the 2 zeros depends.
That's only 2% of the float if you convert them to shares.
So you're saying, yeah, it's still, to me, it's a lot. Anytime an option has 100,000 contracts outstanding, that's actually quite a bit.
Oh no, not one strike. It's like all of the strikes, all the puts.
Oh, okay.
22.
Yeah, that's a little better. That's still quite a bit, I would say. I mean, but it's not that crazy, I guess.
Basically, all the puts from 50 going upwards all have anywhere from 100 or something to, hundreds. Not thousands, but every strike's got hundreds.
I'm just a stock jock. I think the vol side is a little bit different. Clearly there's a lot of trading going on here. It's a very kind of like volatile stock, but for me, I prefer to think about if an auction were held today where 15 or 20 private equity companies were taken into a room by Goldman Sachs, and Goldman Sachs says, hey, you guys have a lot of capital. Carlyle, KKR, Blackstone, Berkshire Hathaway, the who's who, come up, you have 2 weeks of unfettered due diligence, come up with a bid where you can buy this company, put in a bid. I think most people would bid for $10, $12, maybe $14, and that's about it. I don't think anybody in their right mind would sign and seal an offer letter for $25 a share, nor do I think anybody would really sign and seal an offer and say, we'll pay $2. It's not worth that much. I think a sober, rational investor would pay roughly that much. And I know that's frustrating because I got a lot of downvotes for this, which was funny because a friend of mine said, "Oh, I saw you said did the AMC thing. What was the verdict?" And I said, "The Bulls are pissed at me and the Bears are pissed at me." And the Bulls wanted to go to $1,000 a share, which is delusional, but the Bears wanted to go to 5 cents, which is also delusional. It's a valuable business. I mean, movies are disappearing, and it's a pretty sweet business. So I think that if it goes low enough,
which Bears said that? I've continually said that it's not going bankrupt.
Well, good for you, but you're not the world doesn't revolve around you, Amy, even though my world might revolve around you.
Hate about it.
I don't know. I
get so much hate for it.
I think there's plenty of people that think they are going to default and go bankrupt. So,
I mean, can I bring it back to do you remember how we talked about how Meta is going to take over basically all this entertainment?
Oh, that's your theory, yeah.
I mean, I kind of want to get back to that because what you said didn't really sit right with me, and I don't think I did a good job at defending my stance.
Hold on, Amaranth is live right now. I might have to watch that, but please go ahead.
That definitely takes priority.
That was just a joke, but go ahead.
Anyhow, bathtub streams, but
she doesn't pay attention. She doesn't pay much attention to me, but
got that dono money.
Amaranth.
Amaranth is some super sexy Twitch streamer. I think she makes $20 million a year, some small fries.
Wow, good for her.
Something like that. I don't know how much money she makes, but I think she's doing just fine.
All right, I'm gonna try to pull off perhaps one of the greatest segues.
Go for it, man.
So, let's tie in everything you were talking about. So basically, you're basically talking about this idea of the market being an information arbitrage system.
Yeah.
But the problem I feel is, is it this might sound funny, but is it a vibe arbitrage system? Because although everyone knows that there are these headsets and Meta is working on with Reality Labs, all the engineers they haven't really tried it out, they haven't really vibed out with it, and actually felt what it's going to be like, right?
I know a lot of people who hate VR that they feel like they want to throw up after 5 minutes in it. Just because you're a fan doesn't. Yeah. I mean,
well, that's just because it's a primitive form of the technology, right? You can't.
They've been saying that for a long time now, man. Some people think that's never going away.
I mean, the thing is, the motion sickness only really happens it's the thing you gotta really drink the snake poison a bit, and then it stops after you kind of throw up once. But
some people don't want to do that,
Yeah, I mean that is a pretty big barrier and friction, but
So yeah, I mean, it's for those of us that don't know exactly what we're talking about here. There was Hash mentioned, and it's not a stupid or silly thought, but he mentioned kind of, and it's important to have these thoughts. If you ever read my blog, they're full of them. I think it's important to be creative, and there's value in that. The creative idea he had was that in the long run, we're not going to watch films in movie theaters. We'll watch them on VR, and I don't think that's crazy at all. I think it's just unlikely, but it's not impossible. But I think for the next 10 years of cash flow, it probably won't make a difference. But these things creep up quick, so maybe it will. I don't know.
I mean, I think the idea is a bit more nuanced than that. Like, basically, Zuckerberg talks about, anything that is a screen that we use, and not even just screens, but you can think of a clock as the same way. When you have a clock hanging on your room, or a poster, or things like that, where there's ornaments that you don't really touch or feel, but they're in your house and they're all around you. You can all really, if you have a system that can mimic, it's like a Turing test for the visual world, where you can mimic the world to an extent where you can't really tell it apart. Like you can replace all these things, whether it's a screen or a clock or posters or decorations with.
Remember, you're talking to the guy that tried to put $10 million into Oculus after first trying it, so I'm with you.
That's right.
You're
talking to the guy who's been playing, who's been on it for hours every week for the past 4 or 5 years.
Yeah, but I'm a fan too, but it doesn't mean everybody else is a fan, and it doesn't mean that, I'm a fan of a lot of weird things. I like to play chess, I like to, play League of Legends. I like to program in my spare time. I like to, it doesn't mean it's right for everybody, and I think VR will have its use, but there's 250 million people that go to the cinema every year, and, it's just, I don't think, going to be what replaces America's pastime, at least overnight.
Right, but
20, 30 years from now, sure, why not? But, that's not kind of our job to worry about as investors, at least for today and tomorrow.
I mean, it is all about habits, really, as you're saying, and we might break these. It might take some time to break these habits, but
it may never happen. Predicting the future is notoriously difficult, especially when there's uncertainty involved. So, cribbing Niels Bohr for a second here. But Bear, do you want to jump in?
I was going to ask, do you play ranked on League?
Yeah, I play support. I'm a mediocre player. Cal?
Yeah, so I don't know if this was covered already or if you want to get into it. But with the market down 20% on the year, what's your outlook for the rest of the year? Or better yet, how are you positioned? And then number 2 is, what's your chess ELO?
Great question. So, I don't like to follow beta. So for me, I think, cash, shorts, longs, everything like those 3 components of a portfolio are just important to have no matter what the market's doing. And I think when the market's going up, it feels silly and it feels stupid that, you're losing money on shorts. A friend of mine gave up. He was one of the biggest hedge fund managers, period, but definitely like the biggest or second biggest biotech hedge fund manager. And we used to short stocks together all the time. And he's like, Martin, I gave up on shorting. It's just, I never make money shorting anymore. And I was like, all right, man, but, I know it's painful, but eventually, all these stocks will be shorts. And of course, not a moment too soon, but within a year, the biotech market went to one of the worst bear markets it's ever had. So it just feels bad to short sometimes. But the reality is it's necessary. Stocks get overvalued, stocks get undervalued. And right now, we're seeing kind of one side of it. It's probably, we're getting to a point maybe where that's going to boomerang back, but hell if I know, who can really predict that? Who has had a track record of predicting that over the long run? Very few people can boast that they can predict turns in the market. So for me, at the very least, it seems more realistic that I can predict turns in one industry and say, all right, based on my one industry, I can kind of get a sense for, biopharma, for instance. And I think over the long run, I've sort of proven that that's the case for me, but it's been hard won. I mean, I've had a lot of problems over the years trading biopharma. I finally feel like I got my footing sort of 10 years after starting. And, there's a lot of reasons for that, but in any event, I think trying to predict the stock market's pretty difficult. For me, I've also made more money as an entrepreneur than I have as an investor. So what I've done is I put all my money in my drug companies, and if my drug companies see good investments, I expect them to make those investments so they can kind of trade. And that's also worked for me. Right now I'm in some litigation, so kind of my positioning is basically irrelevant to a certain extent. I have one big position that I'm working out across a barrage of lawsuits and things like that, but thankfully the position's still worth quite a lot. But I have one large, long private equity position, basically. But that's a whole other story. So anyway, chess elo, it depends. Like my UCSF is 1400. My light chess is around 1900. I haven't played a UCSF tournament in a while, but I'm pretty weak. Not a really good chess player. I love the game. I'm not good.
Do you play on chess.com?
Yep. Yeah.
What's your elo there?
I haven't played much on it, but it's around 1400.
What's your username?
Martin SHKR.
All right, I'll add you. Thanks for the responses.
Yeah, anytime. Anybody else want to chat AMC, or can we wrap it up? I recorded this, so if anybody wants to listen to it afterwards, I know a lot of people might want to do that. So I'm just making sure that everybody has a chance to ask about AMC. Pete?
What's up, guys? What's going on, Martin?
What's up?
Hanging. You guys, I got lost in the chat conversation. I'm more of a Connect 4 player, to be honest with you.
All right. What's up?
Hey, real quick, I just wanted to great breakdown on how to get with fundamentals and all that stuff, right? It's foreign language to me, right? New retail trader, all that. But it always perks my ears, man, when you bring up Tiger Global.
Yep.
Right? And the connections you have there. I think you called yourself an OG, right?
I'm a Tiger Grand Cup, technically.
Tiger Grand Cup. So here's where I have the problem, man. Help me out here, right? We literally have a DOJ investigation, right? A sealed indictment that went out against Wang and Archegos.
Yeah.
And in that, it basically states that one fund, right? Essentially one person.
Yep.
Took away the entire supply and demand.
Yep.
Of a ticker, right? Through what?
He did it, man. I mean, anybody can do that. If you got the scratch. The problem with him is he didn't have the scratch, so he was sort of faking it. He had
the scratch. He had the scratch until
he didn't really, because he misled his creditors as to how much money he had. So he was borrowing 10, 20, 30x what he had. But
no, 100%. But if it didn't move against him, he still got it, right?
Hey, if the bank will lend you the money, but if you're borrowing it under false pretenses, I think that's kind of it's still fraud.
But wasn't it the offering and the subsequent sell-off that sort of screwed him? Because Viacom did that offering.
That's what kind of that's what sort of popped.
Everyone sold off, and the bank panicked.
That's what popped that's what popped the bubble.
That's exactly my point. I mean, if that didn't happen, the scheme would be able to go on, right?
Possibly yes, possibly no.
I mean, I think it was doomed to fail, but
yeah,
it would
exactly.
have gone on longer than it did.
Yeah, I would say possibly yes, possibly no.
Okay, so we have that, right? That's in the court process. Everybody agree?
Agree on what?
Agree that that's actually a case that's being brought by the DOJ.
Well, he committed. He seems to have committed fraud. I mean, that definitely seems to be true.
All right. Then you get a congressional report, right? That specifically. Well, wait. Let me not even go there yet. Because of that Archegos case, Credit Suisse got really jammed up, didn't they?
Yeah.
Specifically with ties to GME, right?
They closed my account, unfortunately.
Completely changed one of the biggest banks in the world's business model.
I wouldn't say it changed the business model, but it changed the banks.
100%,
No. Their business model.
Bank.
Their business model is the same. I think that their risk controls is changing, but they're still investment bank. They're still doing investment banking. I mean, they didn't decide to get into the gold business. They're still
nice, very nice, Martin. Very
yeah.
Nice
So
little shot there.
yeah, they're still trading stocks and underwriting debt and things like that. I think they're double checking their clients' books first before they're lending them billions of dollars. But that's a whole other story.
Well, yeah, I want to ask you too, Pete. Like, you understand that the fraud was between the banks, right? Like, so the banks that he was taking all of this money from.
Thoroughly, yeah. I
didn't know about the other banks.
The man read the indictment.
I did. Amy, I thoroughly understand it. I encourage everybody to read the report, right? Because as a retail trader, and as a matter of fact, as a citizen of the country and the world, it's terrifying. The potential disaster that could be going on between the banks and these family offices. That's where I have the problem, guys. I don't know how anybody doesn't have that problem. Like, if something moves the wrong way, are we one day away from financial disaster around the world?
No, I think that.
How do you say no? Nothing has changed, Martin.
Yeah, but that's the funny thing about Wall Street. If you read that book I mentioned, John Steele Gordon's The Great Game, which is this great history of Wall Street, there have been charlatans, frauds, and criminals from the day one of Wall Street. You're talking to one right now. Like,
I understand. Martin, that's my point, right?
it never ends. And one last quick point is that sometimes it's hard to tell who the criminal is and who isn't, depending on the day of the week.
100%. Make the connections with me, right? Playing Tiger Cub, right? Tiger, you just mentioned, what's his name, got crushed this year.
Yeah, Gabe. I'm sorry, Chase. Yeah.
Right? So how many
Gabe was a Tiger. A lot of people don't know, but Gabe at Melvin was a Tiger Cub too.
There you go. How many Tiger Cubs are running firms out there?
There's like 30 or 40 or 50 of us.
That's terrifying. Now, let me bring you to...
Well, they're pretty good investors, mind you, but...
Well, sure, if you're fixing the game.
No, there's no fixing of the game. You're making a big leap there.
Yeah, and Pete, this is kind of where I get I get a lot of shit. Like, everything doesn't tie back to your stock because you love it as much
Amy,
as you do.
I'm so far off AMC, it's not even funny.
Yeah, he's not bringing up AMC.
Okay.
AMC is like, I don't mean that in a bad way, right? Like, I truly believe that AMC, GME, and several other tickers,
right,
as we found out through...
No, that's my bad. I made an assumption. That's my bad.
Yeah.
Long had like 136 billion of exposure to $1 billion worth of actual equity, right? Like that's only comes from, right?
If you believe the allegations as they're stated, the man is a criminal. But like I said, having gone through the same very difficult process that he went through, I will tell you that we should...
Ask you guys a question.
Go ahead.
Long had, would you say, $160 billion in exposure?
136 billion in exposure.
136 out of one firm.
Yeah, not many guys are doing what he's doing.
Is it a leap? Is it a leap to say that potentially some of these Tiger Cubs learn their methods from each other?
No.
And it could potentially be going on there. And hold on, let me finish.
Go.
The fact that there's no transparency or structure to understand what's going on with these firms.
Hedge funds are
it's a terrifying thing.
Well, here's like, let me guys. All right. I just have to press the mute button. It's Ask Martin Shkreli Day. All right. Y'all can host your own spaces. I'm kidding. I want there to be a conversation. I just want to throw in that hedge funds have been unregulated for a long time, and every time a hedge fund blows up, everybody says the same thing. How could these pools of money be unregulated? They have so much, sway, and they have so much... Well, the reality is, if you fall under the Investment Advisory, Act of 1940, the Investment Advisors Act, you have to get SEC registered. And the thing about a family office is you don't. So basically, Wong got to cheat because he's a family office guy. The rest of the Tiger Cubs, which all of whom have outside money, they have to get audits, which a family office doesn't have to. They have to provide the audits to the limited partners. And they have to do an SEC inspection, which is similar to seeing a financial proctologist. It's not easy. So it's definitely a difficult and extensive process. So I wouldn't, smell smoke and see fire. Are there other family offices doing stuff like this? Well, I think every single prime broker after the Archegos debacle is asking every family office, hey, guys, you got the money that you say you do, right? That's sort of like the conversation that every prime has had with every firm, basically, I think. Anyway, let me unmute. Sorry about muting. I don't like to do that, but when there's a shouting match, I need to do that.
I wasn't shouting, but I just wanted to ask a question back. Do you not think that it is a leap to assume that everybody is doing what this one person did? Not to say that there aren't more than him, but I mean, it's a leap to think that, they're all doing it because he did it. Right?
I would ask you this, Amy. I would ask you this. Is it a bad thing to say, whoa, this happened here? What is going on with these family offices, and how do we make sure it doesn't happen again, no matter who's doing it? And just to go back, several of the Tiger Cubs run family offices.
Yeah, but
it's there's definitely like organized, it's an organization of crime, right? Because it's a RICO case.
I would defend my clubbies here for a second. Wang was a known kind of outcast in the Tiger community because he already had been nabbed for insider trading before. So the other clubs, if you've worked there and stuff like that, like nobody likes to do 20x leverage. Like that's not something you wake up in the morning you're like, let me just borrow 20 times the amount of money I have, because you know what's going to happen. If you're wrong by 5%, you lose it all. Why would you work for 20 years to make $1 billion and then say, yeah, you know what, fuck it, all on red, let's go? It sounds like something someone from Wall Street Bets might do, but if you spend 20 years...
It's more like you put it on one roulette number.
Yeah, all on...
That's kind of my point, is the amount, and Martin, this isn't against you or anything, I don't want you to take offense, but the amount of people who will commit the crime or who have the propensity to do so, I think is probably less than you would imagine.
I agree, and if you look at...
Hold on, Martin, hold on. Give me one
Go ahead.
I don't understand, right? Like, I bring this up, and I don't understand. It blows my mind that the conversation's not like, yeah, that is kind of scary, right? Rather than taking the stance of, oh, no, that definitely doesn't happen.
But Pete, I'm not telling you you're wrong, and I'm not disagreeing with you.
It's a little scary.
100% criminals in this industry. I'm just...
All right. I agree it's a little scary. Let's go on to Semi. Let's not beat a dead horse too much. Semi, what's up?
Hey, thanks for having me up. I just wanted to chime in because I was short many of Huang's companies before we knew who it was. Yeah, it's kind of funny because at the time I was like, wow, I thought it was multiple entities were taking out these total return swaps, and I had no inkling that it was just one absolute madman with balls of steel.
I've done it. I've done it before myself, and I was even... One trade I did, I was conversing with a hedge fund that was looking at the market in that specific stock, and the guy was messaging me, who's doing this in this stock? Have you heard about this guy? He's going crazy in this one stock. And with a fucking straight face, I responded, no idea. I wonder what he's up to. Meanwhile, I'm fucking scrambling with those exact brokers trying to figure out how the fuck to get out of this trade.
Right. Here's my question, and Semi, I thought about that, right? Because you could go back and kind of reverse put together how that went down, right? And apparently what you just said, you saw it happening, right?
It never ends well.
Right, but how did you see it happening, Semi? Like, where does that information
Good question.
come from?
So there were a couple. Viacom and Discovery I didn't pick out, but GSX was a
GSX was a worthless company, yeah.
70% of Discovery.
And it just starts going absolutely nuclear. It went up 500% in my face, and you got to wonder why. And And that's when you start looking, okay, well, who owns it? And when you see total return swaps for 80% of the float, it starts to kind of come together.
Well,
And,
how'd you see those? Were they 13
How
Gs?
do you see the TRS?
Well, usually it's a 13G or 13F filed by the bank.
Exactly. So you know that Credit Suisse doesn't want to own a quarter of this company, and neither does who else? Goldman Sachs. So and then you can see that there's who was it? Young King Yang. Somebody in Singapore bragged about this position. The article is still up there, but he was basically the most successful hedge fund, and he bragged to Bloomberg about it, and that's when it really sort of came together that, okay, there are some individuals that are friendly with each other that are kind of getting in on the action in this way.
Yeah, I
so
think.
Let me ask you, Martin. Let me just follow
please
up
go
on that,
ahead.
right? So now you got Chase, right? Chase Coleman, Couture, D1, all down, right? Like, would you suspect maybe there's some smoke there?
No, I think you're reading too much into it. The Tiger Cubs got a little too out of hand, being long everything. Because when they were long everything, they were up 50% for the year. Remember, and now that they're long everything and short nothing, hey, it's a bad fucking time to be a long only hedge fund manager. So
drink a little bit of their own Kool-Aid, right?
Yep.
Like all.
You know what the thing that gets me, guys, is that we're here, right, and like having this conversation, and I you guys know, I know you know that I bounce around these spaces, right, and I hear the Nobles of the world, and I hear, very sophisticated traders getting on these Tiger Cubs too for whatever it is they're doing. So it's funny to me to get like we're kind of defensive for them here, right? Like what's Noble's gripe with the Tiger Cubs or a guy like Mark Cahotis?
Well, I can tell you that Noble's gripe with Wang specifically was that he funded Kathy Wood. I mean, Noble's gripe is Kathy Wood.
Another Cub, right?
No.
Kathy Wood.
No, not Kathy Wood.
Stop right there.
Yeah. Wong seeded the ARK ETF, the RK. So, and same with Gerber Kawasaki. ARK Invest,
in total.
Yes, and Ross
So
Gerber. I mean, he's got.
We'll call Kathy Wood a kitten then.
No, not even.
No, she was never associated. But
not even.
But Bill Huang and Kathy Wood were close via. I mean, the financial world.
No, via.
And I believe their church.
Via in Christianity, exactly.
Via God's.
Via their religion and
via
church.
the almighty dollar.
They both had religious directives.
Right. So, I mean, that's Noble's issue with that. I can tell you specifically that. So.
Noble's washed up anyway.
Anyway.
Yeah, no, I'm not here nor there.
Let's talk about.
Comparatively to Tiger, do we know how Cotu's doing?
Cotu? Tough year.
Yeah. Yeah, I heard that, but quite like close to as bad as D1 and Tiger.
No. Not
that's
that,
pretty hard.
Not that bad. But
listen, I'm going to step down now. But my point is this, guys: you have this case that makes these currently allegations, right? But they're pretty solid, and it's pretty scary if that's how it's run behind the scenes. One, two.
Just one guy, dude.
Yeah, well, that's all we know about, right? And there's no transparency on the other end.
All these schemes end up blowing up. Every one of them. Madoff. Doesn't matter if you're honest. If anytime you just borrow a bunch of money and fucking throw it at these guys don't stop. And again, I was once one of these guys. Like, there's an addiction.
Dude, if I was in a position like that, right, and I found this glitch in the Matrix, and I'm hanging out with my boys, and I said, "Yo, listen to what I did."
I've done it. I will tell you. Eventually, the banks want their money. That's what happened with Wong, and that's what happens with anybody. You might get away with it for a year. You might get away with it for 5 years. You might get away with it for 10 years. Eventually, you're going to fuck up, and the banks say, hey, you're down $30 billion. When are you going to send that money over?
Did you see that he was up to the tune of 70% of Discovery's float?
Yeah,
at some point, where it was like that's he had $1 billion in total cash, right? Like that was the assets under management, and then he spun himself into 130 of leverage. It's almost impressive.
It is impressive, actually.
And he never saw.
It's not impressive. It's terrifying.
He didn't see the offering. He didn't see the offering coming. Right, the offering was just absolute devastation.
Dude, Pete. Maybe the disconnect here, Pete, is that this isn't. I'm gonna just remove you because we're talking about this shit too much. But my last word on it is the disconnect could be that there's nothing new about this. Jerome Kervile at UBS, right? The guy took $1 billion fucking $5 billion flyer with UBS's money.
If anything, we like look out for it, right? Like it's like, oh, there it is. Like, right, you're looking for something like that, right? It's not completely unbeknownst to us.
That's right. When the market, especially when the market seems like it's behaving abnormally, for instance, a friend of mine's are speculating right now that there was a Bitcoin whale that got destroyed. We were shorting Bitcoin at 30,000, and it was being really, really stubborn. It was really weird. The whole global markets were in meltdown, and Bitcoin was just sitting there, 30,000, 30,000. 30,000. Take everything you want. Sell me everything. 30,000. I'm buying. Well, eventually, Mr. Buyer's fucking money ran out, and there was this delayed reaction for 2 weeks. Bitcoin could not fall, and then eventually, boom, 20,000. Right? The bottom fell out, and that's what markets are. That's what happens.
But all of us were sitting there going, "Why the hell is Bitcoin staying at 30,000?"
Yeah, why is the riskiest asset in the world is fucking holding like a champ? We're like, man, this is bullish.
And nobody's got any capital, and sure should be putting any capital into it, right? How's it not going down?
Right, and it's just because some guy who's sitting on 100 billion says, you know what, this is the buying opportunity I've been waiting for. Let me run in and buy 5 billion. And it's like when Ashy Larry runs into the World Series of Dice at Dave Chappelle's Chappelle Show skit. If you remember that.
With Ashy Larry?
Yes. But jokes aside,
yeah, I just posted something in the Nest. It just got shared like a couple minutes ago. Turns out Tiger Global Management has its first gain.
All right.
I thought it was appropriate.
Let's make it all back, baby.
My cousin works at D1, and I just clown on him right now. It's quite fun.
Yeah,
I wanted to bring up Bitcoin. Just had my mind jogging in terms of the cycles that went on in 2021 with the very anomalous kind of malicious capital going on. It was moving around. It started with GameStop, and then Bitcoin was in April, then Doge May 8th, Ethereum May 12th, these are peaks, and then you had the run-up for GameStop. AMC followed right after Ethereum, and it was like dominoes. There was just these egregious peaks, and it almost makes me think that the next time AMC goes up, it'll probably come along with the malicious GameStop pump, the malicious Bitcoin pump.
Malicious how?
Yeah, because there's always been this like dissidence, underground community capital side of things where Biz and Poll and Reddit and various organizations come together and they start to form this floor that becomes very easy.
That's a floor. That's a floor you're imagining in your head because you consume that media. The real financial markets are much bigger than guys on 4chan and Reddit.
Yeah,
they're decided on Wall Street in San Francisco and in Shanghai and Hong Kong with guys with billions of dollars and entities with billions of dollars. Not some. I mean, I'm not saying that the small trader doesn't matter. But in the scope of a $1 trillion asset, I don't know that my orders and your orders in Bitcoin will make much of a difference. But Christian, do you want to go ahead, Christian?
Yeah, thanks. I had a quick question about like the fundamentals for AMC. I did research like a year ago, and it showed that movies that are being shown in theaters, they've historically over time had shorter viewing periods in theaters, which would impact their profitability. I was just curious to know how you think management should go about potentially like getting better deals with the film producers.
I mean, I actually think they get a good deal. The fact that they get all this margin just on the film, and then they get 80% margin on food and beverage. It's not a bad business. It's actually a pretty good business model. It's pretty capital intensive, but when you have like stability in how many theaters there are, like people just don't open movie theaters tomorrow, you know. They actually have buying power too at AMC, right? Whereas other theaters don't have as much buying power. I don't know that you can do any better with 50% kind of film gross margin. Pretty good deal.
Yeah, 50% is above industry standard when I was looking into their margins.
They can kind of make or break a movie to some extent, huh? I mean...
Yeah, they have pricing power because of market... But, like, if they already have pricing power and a decent-sized market share, then what's going on with their direction? Why are they not capitalizing on?
They had a really bad 2 years for you-know-what reason. I mean, it's and the other problem is they were really levered, right? They bought their competitor. They were really levered going into... It was like the perfect storm for them. That's why they had to recap. And now they're kind of just going to recap the other way over time, slowly, right? Really slowly. But they had bought their number one competitor, right? Just prior to the deal closing, COVID happened just after, I guess. And they took on a monster amount of debt to do it. And now they're just kind of like going to have to delever really, really slowly. They're lucky they avoided bankruptcy, to be honest. Let's hear from some new speakers. If you've said your piece, step down. Let's get one or two people up here.
Can I ask a question?
Yeah.
Well, it was more related to what it was like your last 5 years. I imagine you had lots of time to read, probably more than you ever did, and to think. And I always liked, I liked the streams before, but I wonder, like, what books did you read? You said you did lots of maths. How did your thought process change with the reading you did?
Yeah, it was great. I'm going to go back. It was fucking wonderful. I can't wait to just jump back in and get all that free time again. No, I'm just kidding around. I don't know, to be honest. I mean, it's hard to say. Like, I don't think that, like, anything... I think it reminded me that people who are really busy don't have time to read. Like, the average CEO probably reads, like, 1 or 2 books a year, you know? So, that's why, like, it also reminded me that, like, when Bill Gates and Warren Buffett say the most valuable thing they have is focus, and they try to keep their schedules as minimal in terms of number of meetings and daily time wasters. It's sort of a reminder. But jail isn't all free time. Like, people think you're sitting there with your hands around jail bars, desperate to do anything. That's really not the way it is. Most people, their calendars are actually full. You know, you get a routine, your TV schedule, you spend 2 or 3 hours bullshitting with the other guys, you maybe play some basketball, take a nap, email your family, your one phone call. If you have a jail with phones and all kinds of contraband goodies, shit, you might be high all day, you might be drinking, you might, if you were me, you might be trading, you might, there's tons of things that you can do, tons of things that you can do in prison that, are not obvious. So anyway, let's wrap this up. Anyone has last point on AMC before I go?
One mini question. Do you still have your Enigma?
I'm going to save that one for the Fifth Amendment. Any last questions on AMC? Real?
Does your DCF take in?
I'm not sure if you even addressed this, because I joined a little bit later, but I just want to know how they dropped it so significantly. How would they go about doing that outside of what we as retail suspect is going on with it as it relates to AMC?
Can you be more specific when you say they and dropped it? What do you mean?
I mean the firms that are short on it, buying a bunch of puts, or are they just borrowing a bunch of shares to drop it? Because I look at the option chain, and a lot of it just doesn't really add up. I mean, a lot of money just being blown into the ether, and it just I just try to figure out where they started.
Listen, I've shorted a lot of stocks in my time. It's been 22 years of shorting for me. I don't think that there's any foul play or something. I mean, it's just, You short a stock, it goes up. You short a stock, it goes down. I mean, it's nothing.
Thank you.
Nothing special. Like, there's nothing you can. That's one thing that I think AMC apes should understand. There's nothing you can do as a short seller that can make a stock go down, unless the demand just isn't there. You know, if you start shorting, it's just like a long seller. There's no special distinction between a short seller.
Except there's a maximum gain, right? Like, if anything, it's a less advantageous side to be on, right?
It
It's
is.
only to zero. Yeah. I mean, I play it better, but like...
Me too.
Yeah, it's... Yeah.
Yeah, I've made more money in shorts than longs to some extent, outside of entrepreneurial endeavors, obviously, which are inherently...
Yeah, why do you think that is? Like, what about the short side? I've been trying to figure it out for myself for a while.
I think it's evil, psychopathic mentality, basically. But,
I love it.
I think when you go long on a stock, you have too much hopium. But if you go short, you're thinking a little bit more critically about the objective facts.
That's probably true. And that's...
It's the stigma of shorting, right? You're betting on the stock price going down. And I think there's a stigma attached to it that you somehow hate this company and you want to see it burn to the ground when, I mean, most of us are just here to make money. Like, you know, like Martin's looking at the fundamentals. We'll look at the fundamentals. Like, I actually think you look more at the fundamentals when you're shorting. But
I don't know. Like, even shorting
I also
stocks
think
like
that
Nikola, you know, there's a good in shorting.
I think most of us as traders look at it as an opportunity to make money. We don't look at it like we hate this company and want it to die.
Well, you also don't look at it as you're not trying to short a stock to make it go down. It's actually kind of the opposite. Every trader knows, especially when you get successful, liquidity is your enemy. You do not enter a stock position to make it go anywhere. You do not want that, right? Because when you start buying the stock and forcing it up, all that you're doing is fucking up your own pricing, right? If you start buying a stock and it's going up, it's actually kind of a bullish sign because there's just not much supply. But you're losing your opportunity to buy at, say, 10 as it goes to 11. If you put in for 50,000 shares and it goes to 11, well, unfortunately, you bought too much. I'm sorry, you should have bought earlier because there's just no supply around. Now, let's say you start buying a stock at 10 and you buy 1 million shares and it doesn't go up 1 penny. Oh man, that's not good. You know, it looks like that stock's going to fall apart.
Well, that's why I always get nervous when, like, on these rallies and I see everybody rush to short. Like when I'm holding, you know, a put position in something, and I'm like, don't rush to short it. You're going to make it go higher. But I see it every time. Every time we have a rally, I see that people rush into short. I'm like, oh.
And by the way, I just say that shorts are pretty clueless as longs are. I mean, there's no fucking magic bullet. Like, I've shorted hundreds of millions of dollars of stock, definitely billions of dollars of stock in my time. Like, I don't have any better edge on that than longs. I mean, there's no trick I can play to be like, oh, let me order up some synthetic shares or something. It sounds so stupid and ridiculous to a professional. Like, there's just not any possible way to actually...
we print them in my back office.
Oh, I didn't know that. You gotta let me in on.
I think
let me in on that.
We've discovered too that there's some confusion around like short volume and what it means and how it works. Like, and you being a hedge fund manager at one point, like, and how it directly correlates to inventory management.
Yeah, basically irrelevant, right? The only
have to ship you a synthetic printer.
The only
But I think there's a lot of confusion around how it works, and maybe you can shine a light on this. But we were talking about how, you know, if an order comes in, you know what's in the inventory, so you fill it, but you're filling it as short at that moment, that very millisecond of time, but you know that it's there in the inventory. So then, you know, you go and you pull from the inventory, blah, 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 but you can't go back in time and change that it just was reported short volume.
Yeah, I don't know. To me, it doesn't make much of a difference. Like, short interest seems to be right, but even then, I'm not even sure that's right all the time. So, like, I don't know.
Right.
I don't really care. Like, at the end of the day, borrow rates are...
It's delayed, right? It's delayed.
It's a lagging indicator, right?
Last but not least, SSV. What do you got? I gotta get on a call with Ken Griffin and get my money.
I love it.
Ooh, are you getting your level 6 promotion tonight?
Tell Kenny Boy that my bonus is late.
Yeah.
He's getting his own printer.
Yeah. Thank you, everybody. Good night.
Good night. Thanks for coming, everyone. AMC to the moon. Let's go. Let's fucking go. See ya. Good night.
Can anyone speak on the 475% cost to borrow?
That's a lot.
Yes, I can. I can. No, I can't because that's actually not true. That it's listed in Ortex as cost to borrow max.
I'll lend
can max out.
If I'll lend at 475, no problem. I'll go long and lend.
Let me explain it though, because this is floating around Twitter. That is the max, meaning that it is the cost to borrow max. It is not the current.
Hey, I'll lend it for 1,000. I'll lend it for 1,000. That's the new max.
I'll lend it for $1,000 flat, right? I don't even care how many shares. It's still gonna be more than what the share.
Oh man, what a riot, huh?